This is Eric Mwatha with Mwatha.com for the week of May 17, 2012. Let's take a look at the markets here. We see that the Dow ended the first Friday of May, experiencing one of its bigger drops for the year, down 168 points. But really what is troubling from a technical perspective for those of you who are still wanting to see the market go higher is the fact that we were trying to make a 4-year high here a couple of days before that. While that was happening, we see that the technical picture on the relative strength index, the RSI, was leaning to the downside. So we have prices pushing to new highs, but the technical picture was not good. That was in itself, once that was recorded, reason to be worried here. Now the market is not really broken yet. We can't say the market is broken yet because we are still trading closer to the 50-day moving average on the Dow Jones, but this negative divergence with the price making new highs and the technical picture not improving is a sign to be worried about. Also, you'll see that while the market has been pushing to new highs, we see that the MACD is making lower and lower levels. So this negative divergence might be a reason why we might be seeing this market continue being under pressure as we go into the middle of 2012. If you take a look at the Dow Jones from a weekly chart, we were actually trying to break out above 13,232, but we failed. We opened the month of May on a very strong note, but we've reversed before the end of the week to head lower, which again, like I said, you see that the market also on a weekly standpoint, you see that market making new highs here, moving to new high ground. Yet on the weekly chart, you see that the relative strength index is making lower lows. So you see that the relative strength index is making a negative divergence. This being the case, you'll notice that the market is gonna still be under pressure. But really, if you look at it net, we are still trading above the 10-week moving average. So the market could recapture its lost ground very quickly, given the fact that it's still holding above critical and long-term weekly trend lines. Also, if you take a look at the Dow Jones from a 60-minute chart, you'll notice that since the lows of October 2011, we've been holding this line here steady, this support line here, and we are right at that line. So we are holding firm there. We could bounce, but should we see the market break down and head lower below this line here, then maybe we are beginning a new phase in the market. So right now still trading at support levels, but any push to the downside below this line could mean that the market is going to be entering a down phase for the next couple of weeks and months. I think the most important thing here is the fact that I've been talking about the RSI, and this is a 20-year monthly chart for the Dow Jones. This is where I think you can, if somebody was to ask, what's going on with the market here, the most important thing is the long-term picture, the long-term month to month, let's say even on a yearly basis. The market is really setting a very broad and huge sell signal. If you take a look at the Dow Jones, highs in 2007 and highs in 2011 and now highs in 2012, you see that the relative strength index has been telegraphing a resistance level, which is very critical. Could mean that a bear market might ensue in the coming weeks, months, and into 2013, because the RSI is showing that there is resistance on this level here. Take the highs 2007, highs of 2011. You see that the RSI is finding resistance there. This is the Dow Jones monthly. If you take a look at the S&P 500, again, this is a 20-year monthly chart. You'll see that S&P 500 also showing RSI top line resistance on the blue line here, connecting the highs there, highs of 2011. You see that the market has hit that level and is now coiling back to the downside. That might be a very significant sell signal going into the next couple of months. If you take a look at the Nasdaq, this is very evident. Remember, this is a 30-year monthly chart on the Dow. on the Nasdaq, and you see that since the highs of 2000 March 2000, you take that and take a look at the RSI, you see that the highs of 2000, highs of 2007, highs of 2011, you draw a straight line, you find that this dotted line here, this is where the market is finding resistance right now. We've hit that line and we are coiling back. In other words, the line looks like this. This is 2000. We've banged that heads once there in 2000, hit that line again in 2007, and we had a bear market in 2008, 2009. We hit that line in 2011 and had a correction middle of last year, and we've come back, hit that line, and we are pulling back. That could be a significant sell signal right there, which is this level here. So month to month this market might be in trouble. Day to day it might bounce. This is Eric Muathe with Muathe.com. Good luck, peace, and blessings.